If you think gold mining is just about pickaxes and sifting for nuggets, think again. The future is digital, and the stakes are sky high. Let's dig in. At Alicanto Resources, we're pioneering a bold new way to monetize gold at Mina Guayos, our producing gold mine in Colombia. How? By combining real-world mining with cutting-edge financial strategies, making gold investment more accessible than ever. This lets investors from anywhere participate, unlocking new streams of value and making transactions radically transparent. But before you rush to invest, know this: the world of gold finance isn't all golden opportunities. Risks are real, like navigating complex regulations, wild market swings, and the ever-present threat of fraud. So, is this the future of mining finance, or just another trend in the market? For investors, it's both an exciting chance and a serious challenge. Want to support the search and ride the next wave of financial innovation? Do your homework, think long-term, and never forget, when it comes to gold mining, fortune favors the informed. Hello everyone, and welcome back to the channel. Today we tackle a question shaking the bedrock of both geology and finance. Is the rise of tokenization and monetization in mining a golden opportunity or a fatal danger? This is where ancient geology meets digital finance, and the stakes are high. This convergence promises to revolutionize how mineral assets are funded and traded, but it also introduces a new landscape of risk. Whether you are a junior geologist, senior professional, or student, this matters. It could mean new career paths, different funding models for projects, and a fundamental shift in the industry you're building a future in. We'll demystify tokenization and monetization, show you real-world projects, and expose the critical red flags every geologist must recognize. At its core, imagine breaking a massive asset, like a mine, into countless tiny, tradable digital pieces on a blockchain. That, in essence, is tokenization and monetization. You can tokenize and monetize not just minerals, but also hash rate, equipment, or future revenue streams to unlock liquidity without selling physical assets. Benefits: liquidity, broader investor access, and more predictable cash flow. This means projects can get funded faster, and investors who were previously priced out can now participate, stabilizing capital flow. This is part of a larger movement called real-world asset, or RWA, tokenization and monetization, which creates an unbreakable digital link between physical resources and digital tokens. Think of a digital deed: provenance, transparency, and global transferability on-chain. This can unlock capital while potentially reducing environmental impact through smarter financing decisions. Projects are tokenizing and monetizing in-ground gold and other resources, letting investors buy verifiable fractions of certified assets before a single ounce is mined. Beyond gold, alluvial gold, salt, and even lithium deposits are being digitized for broader access. The idea: bring mineral investment to more people while tracking provenance and revenue shares. A new class of platforms, cloud mining, hash marketplaces, and RWA issuers are building this ecosystem. Let's meet the digital prospectors reshaping mining finance. Stay tuned. Next we'll look at real-world players, then the fatal dangers and how geologists can protect themselves. The world of RWA tokenization and monetization is diverse, with platforms falling into three broad categories: NFT-backed miners, cloud mining and hosting, and hash power marketplaces. Each model connects tokens to physical assets or hash rate, but their mechanics differ widely. First, NFT-backed miners. Companies sell digital miners NFTs representing a fractional share of hash rate from physical hardware. This model, used by platforms like Go Mining, lowers the entry barrier for investors who receive daily crypto rewards tied to the miner's output. These services often bundle hosting and maintenance, simplifying the process for the end user. Next are hash power marketplaces, like NiceHash, a digital swap meet for computing power where miners sell excess capacity and buyers rent it on demand. This contrasts with cloud hosting providers, who manage equipment in data centers and sell longer-term contracts. With cloud hosting, scrutinize the fine print, complex tariffs, hidden fees, and contract terms can erode real returns. Beyond hash rate, other projects focus on the tokenization and monetization of in-ground assets, promising token holders a share of the resource value or future revenue. Here, due diligence is paramount. Credible projects must provide verifiable data through industry-standard technical reports. Look for regulated, third-party reports like North America's NI 43101 or global equivalents like JORC and SAMREC. These documents are the gold standard for resource validation and are essential before buying into any in-ground tokens. A more direct model involves tokenizing and monetizing vault-held physical gold. Firms like the issuers of Pax Gold create tokens redeemable for metal, bridging the stability of commodities with the liquidity of digital finance. Others explore complex non-custodial yield products tied to hash rate. Regardless of the model, transparency is the ultimate hallmark of a trustworthy platform. Look for robust dashboards, real-time analytics, and auditable smart contracts. The best platforms provide open-source code, verifiable on-chain transactions, and independent audits. But remember, a sophisticated interface doesn't guarantee safety. Operational failures and counterparty risk are ever-present dangers. Next, we expose these fatal flaws. Prepare your BS detector. We're listing the key warning signs every investor should know. Just as historic gold rushes drew prospectors and pioneers, they also attracted swindlers. The new digital frontier of asset tokenization and monetization is no different, attracting both genuine innovators and opportunistic scammers. The old adage has never been more relevant. If an investment opportunity sounds too good to be true, it almost certainly is. The promise of easy, astronomical returns is a classic lure. So, what are the red flags? Warning sign 1. Excessive marketing. Be wary of projects relying on flashy social media campaigns instead of substantive data. Language promising guaranteed high returns or get-rich-quick opportunities should set off immediate alarm bells. Warning sign 2. A lack of transparency about the team. Are the project leaders unnamed or using pseudonyms? A reputable venture has a public-facing team with verifiable credentials. If you can't find credible professional profiles online, be extremely cautious. Anonymity removes accountability. Warning sign 3. High-pressure sales tactics. Scammers create false urgency with limited-time offers to rush you into a decision. Remember, reputable mining investments are long-term ventures. Overnight riches are a myth. Warning sign 4, and this is critical, a lack of verifiable data. The project must prove it has the legal right to the claimed property. If they can't produce technical reports compliant with standards like JORC or NI 43101, treat their claims with extreme skepticism. Vague geographic locations or missing legal agreements are also major red flags. You must be able to review the contracts linking the token issuer to the property owner. In this environment, your geological skills are your best defense. Here's a due diligence checklist. First, independently verify mining rights via official government registries. Second, scrutinize resource claims. Understand the differences between measured, indicated, and inferred resources and demand full technical reports. Finally, verify the credentials of any qualified person cited by checking their standing with professional associations. Beyond tokenization, AI and data monetization are quietly transforming exploration and operations. AI helps prioritize targets, analyze geochemistry, and improve success rates in exploration. Blockchain adds provenance to supply chains valuable for buyers and regulators. Geologists with data skills and regulatory literacy will lead this new economic geology. Key advice: learn the tech, verify claims, and always question the numbers. So, crypto mining can be new wealth for the prepared and a fatal danger for the unwary. Embrace the learning, apply rigorous due diligence, and keep digging for the truth. Links to resources, reports, and a checklist are in the description below. See you next time.
Welcome to my channel, where you'll find over 2,000 videos on geology, geochemistry, AI, and many other subjects. If you like what you see, help us grow by subscribing, liking, and sharing this channel.
I think these videos are brilliant, and I'm sure you will like them too. Please like, comment, and subscribe, and don't forget to click the notification bell.